Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is the weekly video of my thoughts on market happenings for the week ending August 6, 2021. So for this week, all major North American indexes are up. The COVID cases are up as well, unfortunately, mostly from the D variant. So we are looking at more cases in Canada and significantly more in the US. But the deaths aren't spiking up the same way thanks to the vaccine, and the people who are dying these days are mostly the unvaccinated ones. The market seemed to be taking all of this in stride, and I just think people have gotten used to it. Unfortunately, younger people seem to be getting more affected by the D variant than they were previously. We are seeing a lot of unfilled jobs where employers can't find workers, and this is leading to wage inflation on both sides of the border, and of course, inefficiencies for the companies. The ongoing semiconductor shortage is still affecting companies and the markets. The US reported its GDP numbers, and the real GDP grew at 6.5% annualized rate versus the 8.4% which was forecast. So that was a miss. Corporate earnings have been beating expectations for major companies, and most have had their stock prices increase. But some have done so well that investors are actually thinking that this can't be repeated, and the shares ended up selling off. The US added a mind boggling 943,000 jobs, surpassing expectations, and therefore we're looking at a booming economy. Canada added 94,000 jobs, fewer than economists were expecting, but this didn't seem to hamper the TSX on Friday, and it pushed the Canadian jobless rate down to 7.5%. The US Central Bank is beginning to think about tapering its bond purchases, which would ultimately affect interest rates. Canada, depending on inflation numbers, may start increasing interest rates sooner than the US, and this would affect the Canadian dollar to the upside, but of course impact bond prices negatively. The other big story was the Chinese stock sell-off. So Tencent, Baidu, and Alibaba were all down for the week, but not significantly, as the Chinese rhetoric softened and explanations were provided for the crackdown. So it looks like they're sort of taking a step back and taking it a little bit easier. So that's the report for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.